Hey, it's me again. I realized looking at the production quality of my first video, this camera that I'm using, dare I call it a camera, it literally probably cost 12 cents to add this part to the laptop. So it's got kind of a homespun look to it. I've got a lot of really nice equipment, but I'm just using this laptop and it looks like complete crap. But I think at least hopefully this nice microphone will pick it up. And that's mainly what we're all about here, not looking at my face, but just me sharing thoughts. As seen in the first Brady Bunch yesterday, just talked about these kind of trend rallies. And by way of example, if you look back to the top preceding the financial crisis, there was a counter trend rally lasting from March 17, 2008, through May 19, 2008, 2 months and then some, a 15% bounce. And I can guarantee, I haven't looked at it, but I can guarantee if you look back, especially near the end of that, I'm sure the media was filled with, gee, we're glad that's over. Ben Bernanke was right. It was transitory. Things are fine again. Hunky-dory, hunky-dory, hunky-dory. And of course, we all know what happened ultimately. It was just a segment in what was a gargantuan top and led to an incredible collapse all over the world. But it's nasty. 2 months of it was almost not a downtick in sight, 15% gain, and that was just the S&P. Imagine how much individual stocks went up, and they suck, and that's why bear markets kill everybody. They're incredibly hard to trade, incredibly hard, and in a way, that's kind of why I'm not smart enough to basically dump out at exactly the right moment, because nobody knows when those are, and even worse, nobody knows when the plunges are going to take place. Let me put it this way, since we're playing rearview mirror. If you gave me 1 month of market data and a $100,000 portfolio, I would be a billionaire by the end of that month. If you gave me perfect market data, it's easy. And that's why saying, gee willikers, you should have sold at the exact bottom last Friday when the market was plunging. Well, thanks, time traveler, but it doesn't work that way. It is very deliberate on my part to get options with months of time on them, with patterns that I think are very strong, and just as much as possible, just wait it out. I well recognize that profits go away if you don't get out at the exact right moment. That's not a particularly lucid insight. In the course of those 3 counter trend rallies, I've seen all my profits get destroyed for the year. That's what I'm from March 14 to March 29. I had a terrific profit, and it was all gone. But a few weeks later, I was at a new record high for the year. And I'm pleased to say it's not all gone this time. A big chunk of it is. And that's okay. Because unless the government's going to get completely back into the stock business again and completely abandon everything they've talked about, my view is that once again, we will in short order get going on the downside, and I will once again blow past my peak profit from last time. It is no fun to work and work and work and work and work and see the lion's share, or even all, profits disappear. No fun. It's not what I seek. But it is impossible to know that, this exact moment I'm going to get out of everything and completely just exit the market, and even more so, I'm going to go long everything. That's why that 1 month of perfect market data and $100,000 would be the key to being a billionaire, because it's not possible. You just can't do it. Having said all that, my own positioning now, I'm very public about this, is that I'm not a financial masochist. With charts I'm less thrilled with, or I figure, well, the price will probably get better later. I just go ahead and get out and take the loss and move on and move to cash. And as I sit here now with this 10-cent camera, I've got a ton of cash, well over 40%. I mean, it's almost like half cash at this point. If we go plunging on Tuesday, which I don't think we will, but if we go plunge on Tuesday, well, that kind of sucks for me too, because I'm not in position. But the thing is that the way I trade, which does not necessarily have to be the way you trade, but the way I trade and the way slope is kind of constructed is one chart at a time. I'm not a day trader. I'm not a futures trader. I don't trade like the spider only and in size and, use VWAP and all this other stuff you guys use. I'm a good old classic swing trader. Individual stocks, looking for large multi-week or even multi-month moves, and looking for large directional moves. Abercrombie and Fitch being a fantastic recent example. So it'll never be optimized. But that's kind of how I do it. And as it is now, I've got 27 positions, which is actually small for me. Either 27 positions, and a lot of cash. And I've got dozens of other items that I'm keeping an eye on. And, if the market begins to behave itself again, we'll one by one re-enter into those. But the thing is that as it is now, all kinds of excuses are being offered by why the market will just go on from here. When we began the month of May, no less an entity than Goldman Sachs said the market will go up all through the month, day after day after day. And they gave, I think, literally 11 reasons. This was in Zero Hedge. Goldman Sachs gave 11 discrete reasons why the market's going to go up every day in May. And until recently, May was a terrific month for the bears. But the reasons now being given are we're already past peak inflation. The Federal Reserve, which has not even begun quantitative tightening yet, is already in retreat mode, and they will stop raising rates in September and wait and see. So they'll be accommodative again. People are plunging back. There's huge inflows back into stocks. And the best one of all is all that dead underbrush is gone. All the crappy SPAC stocks and the crypto and all the really junky stuff is out. Now it's just the really good stuff left. That's not how bear markets work. Bear markets don't clear out the underbrush and then move on with their lives. They clear out the underbrush and they move on to the second worst one and then the third worst one and sort of work their way up to like Apple. So the thing is that I'm a chartist. I've done this all my life. I think I'm good at it. And I've never seen a top like this. It's like, unless we are in a purely, completely socialist, communist, command and control economy, and the markets are genuinely dead, this is like technical analysis 101, giant top. Nothing's going to stop it. And the only thing that scares me about it is how obvious it is. Because it's like walking along the street and there's a $100 bill on the sidewalk. You're going to look around like, okay, this is too easy. What's going on here? This is a trick. This is a setup. This is candid camera. There's a string on the $100 bill. You think about, why is this here? This is too easy to just pick it up and be $100 richer. Something's going on. That's how I'm feeling by these charts. Like these tops, these Fibonacci's, everything is so clear and so obvious. And this top is so, even a 4-year-old should be able to see this. What's going on? Am I walking into a death trap here? That's the only thing that scares me. Save that, I think it's fantastic. We just have to kind of muster through these counter trend rallies. Did I have anything else? I actually had notes and such, but I think I've pretty much covered it. So yeah, we'll leave it at that. That's how I'm thinking. And hopefully, in the very near future, we will just start a new leg down. But regardless, I will keep looking at the charts and keep sharing my thoughts with you. Thanks.